The worst month of the year is finally over, but what does that mean for markets moving forward? There are similarities with a year, 1985, that we need to talk about. Also, the government shutdown has been averted, and this is leading into many people speculating that Treasuries are about to turn. Today, we discuss the most important trend line in the markets right now and why it matters so much to you as an investor and trader, why semiconductors could be actually turning to the downside, and also why the Russell 2000 and small caps need to be watched. Join us as we cover the markets for the week ahead. Well, welcome back everybody to the special weekend edition of The Daily Show where we talk about stocks, commodities and cryptos together. We'll be covering the latest macro news and leading indicators. But take a look at this chart. Utilities was absolutely smashed last week, led by NEE. At the same time, one of the sectors that we often look for recovery was finding some buyers. Nvidia, AMD, and many others in semiconductors were finally seeing a little bit of buy the dip. So what does this mean for markets moving forward? Well, let's take a look together at one of the greatest seasonalities that's happened this year, and that is textbook double dipping. Basically, in most pre-election years, we tend to see a sell-off in August that's then matched by usually actually a lower low in September during pre-election years. That so far happened in 2023, and it's something that all of us have been covering here on the channel, so make sure to subscribe if you missed out on that. The other thing that we tend to see now is recovery. So markets have a pretty good October, November, and December, specifically led into by that November and December bull run. But soon we'll look at what happens in 1985 and the similarities there. The other thing for the bulls right now has to be bearish sentiment. It's everywhere. Over the last 2 months, we've seen bullish sentiment basically drop off and bearish sentiment take over. Over 100% gain and a double up of the bearish sentiment. And it really shows in the recent survey reports that we always like to take a look at. 40.9% of people were bearish last week when they were surveyed over the next 6 months. This is in comparison to 42.2% of people being bullish right before the markets fell off. Any surprises? I think not. We were all on top of this one together. Let's also move through what's happened recently as well. We were looking for mean reversion and we've gotten quite close. Of course, most people have been looking for 4150, 4200, and it's certainly not out of the question yet. But remember to keep your forward PE ratios in check, and we've got these over on our Twitter X account, so make sure to follow in the links down below, download them, have a look at them. Generally speaking, whenever you get near the low 17s into the 16.5s in terms of forward PE ratios for the S&P 500, it becomes a pretty good time for an investor to potentially start thinking about whether there's value for them in the markets. And of course, all of us always like to get good price if we can. So what about bullish percent index? This has often been showing us, and it kind of did show us a little bit about the sell-off in August and the continuation of the sell-off into September. Well, so far it hasn't turned to the bull side. I can tell you that on Friday, that was the last day we basically saw a bit of a flatlining for bullish percent index. If we now start to see this recover strongly, it's probably going to tell us that the bottom may be in the markets. That's not necessarily true just yet. Because remember, even in seasonality, often leading into around the middle of October, so anywhere between the 10th and the 15th, we can still see quite a lot of negativity in markets. Let's take a look at that now together. So here's the first trading day of October coming forward. Now there's some good historical averages around here. You can see the S&P 500 tends to be actually a bullish day, 15 up, down 11, so it's about 57.7% bullish. Now, is that enough percentage to go off? No, but of course, it does it's a cool stat for us to take a look at. Interestingly, the NASDAQ actually is a 50-50 coin flip on the first day of October. But what about everything else leading forward? Well, we've already talked about when we have really positive first 6 to 7 month years and what they tend to do into the back end. But where I think it gets more interesting is Wayne's study here on 1985 versus 2023. Now, we almost had a exact similar setup in terms of we've had a very strong start of the year, we've had very bad August, we had a bad September. You can see the similarities here between both of them. And of course, what tends to happen next is the most interesting component. October, very positive. November, very positive. And December, very positive. Now, the similarities between both probably end there. To get a 16% return through the back end last 3 months of the year is almost an undeniably incredible feat, and it's very, very unlikely it does that. But it does show you that there are some similarities with very, very strong years, and of course, this is the normal thing that happens. So you need to keep your eyes on the game in terms of whether we continue to see bearish sentiment and bearish market price action, or whether the price action starts to go bullish. Remember, even if you're a super bear in the markets, if the price action goes bullish and you've got the data stats to go behind, showing you that markets should be going up, then you've got to really be paying attention to that. Let's now move over to what's been happening in the largest dark pool trades and large transactions that have been happening in these markets. First up, we've got the Qs. Yes, NASDAQ was purchased. Well, we can assume it's a purchase last week by the big players, and they did buy a little bit down the lows. Now, we assume it's a buy because, of course, we saw where they sold, and the market sold off from that point. So a large transaction went through near the lows. That's also a bullish or positive sign. Here's, of course, the Ultra Pro Triple Q, so that's T Triple Q, someone placing a large dark pool transaction. We have to probably assume at this stage that it was a buy through the Friday, right down. As soon as it kind of got near that close, we see these purchases, well, we assume it's purchases, come back in, and it kind of points towards some mean reversion, at least on the daily timeframes for these particular indices. And we'll look at that later when we get into the charts on this show. So let's have a look here at Ultra Pro Short. So someone placing a trade up here. Now, was that a take profit? Are they basically trying to go short on the Ultra Pro and therefore profit from actually the markets going up and therefore this thing going down? Well, it could be a short. It does tend to lead up with the T Triple Q, and we're seeing this kind of across many of the major indices. We already saw it on the SPY in a previous video we talked about. It seems like someone's transacting. Whether it's a real long-term transaction, we don't know yet, but we'll of course be focused on that. In terms of some other things that everyone's been watching, uranium has been incredibly popular recently with the community and, of course, everybody out there. It looks like someone's starting to take a little bit of profit. 2 large transactions went through one of the major uranium ETFs. And then, of course, another one that's interesting is high-yield corporate bonds. So we know that they got down to a demand or a key level of support on the markets, basically a zone where it's very important that high-yield bonds were able to support themselves and find buyers. Well, somebody came through with the goods, it looks like, and whether they're buying or selling at this stage, we have to assume it's a buy based on the fact that it's on demand. A large transaction did occur at those levels, and we'll look at that later on. So let's now discuss options, unusual activity. There was a decent amount of activity last week in options, and of course there was pretty large trade. In general, we've seen more of the same. SPY getting a lot of transaction volume because of the shorting going on in the markets. The same thing with the Qs. You can see here 1.32 times the normal 90-day volume average. And Nvidia, Tesla, etc. all finding some nice strong bids. There was also some other interesting ones. Nike here having a large transaction on Friday, 5.53. And when we do our live stream, which happens usually every Monday before the pre-market, we'll take a look at Nike in a little bit more detail because it's at a very interesting level. Some other notables, of course, were things like SE and some of the hypershare stocks. But look at this. iShares 20-year Treasury bonds, TLT, 1.8 times the average 90-day volume, and everyone was trying to buy calls on it. So will they be correct? It's an interesting one. If we go back down to calls versus puts, 52% calls, 48% puts, so I would say it was pretty equal, and almost 41 million on the average daily volume. So quite substantial there when you're talking about what's going on with markets. Let's now jump into the charts, and in terms of what's been going on recently, let's talk about the actual percentage of stocks above moving averages. So the 50-day is really in line with the March sell-off. So in terms of, if you're a bear in markets, this is generally a point where bulls can say, well, we've sold off to kind of a normal level in terms of the breadth of the market. We're expecting that this could be where we find buyers. And for dollar cost average players, of course, they look at these types of levels. The percentage of stocks above the 20, you can see here again, hitting back down to a very similar level, though it didn't go really sell off. And usually with a big sell-off, like a big bearish sell-off in markets, you're looking for that capitulation. Now, a capitulation is a huge sell. It's like a waterfall effect. And usually during that point, you get kind of down to those 10s, those 15s with percentage of stock above the 20 moving average. And something that I like to find, and at the same time, I also like a VIX usually above 25 at the same point. We haven't seen that during this sell-off yet, and I think that's a huge part of why bullish percent index is not turning around yet. It's still saying that, look, there might still be another big sell-off coming because we haven't really seen that full capitulation selling yet. We've seen some aggressive selling, but not a super aggressive sell. Percentage of stocks above the 200 still looks really bad, and that leads into, of course, things like RSP as well, looking not very good, which we'll take a look at in a second. So the VIX over here, 17.51. Are we above 20? No. Are we above 25? Absolutely not. So that's kind of a problem. If we take a look at the VVIX, you can see the volatility of the VIX, or the volatility of the volatility, has dropped off in recent days. So again, some of that heavy selling that we've seen has dropped out of the markets. And we usually expect a little bit more of volatility to come in for lows to be occurred. Now, if we go to RSP here, which is the equal weight, and we'll just move this over to candles for a second, you'll notice that equal weight markets, that is more of the breadth of markets, have not been healthy recently. We moved up in July, so we saw that June into July. It looked like markets were actually starting to find a bit more breadth, and then it dropped all the way back down. So again, this recovery is very different, and I always encourage people, why not load up the S&P 500 versus the RSP just to get a bit of an idea of whether this is a healthy recovery. You'll see the difference between the October into January recovery and then what we saw more recently, which was really a kind of Magnificent Seven only led market recovery. And that's why sometimes people are saying underneath the hood doesn't look so healthy on markets, and certainly a big argument to say that maybe the bonds market is correct and we're going towards a recession and the stocks are already positioning for that type of thing. Yields, this is going to be an important one. We've got jobs numbers coming out this week. Everyone knows that jobs numbers suddenly matter more than any time before. And the main reason that is because, of course, we're looking towards what is the Fed going to do? Higher for longer? Rate hikes? Are we going to see them? Or is the economy actually starting to show signs of going into some form of recession? Remember to watch US 2-year versus 10-year. For anyone that hasn't been watching the channel for a while, and if you haven't, definitely subscribe, then we can see here that we're going back down. So basically, this yield curve, what's happening here, guys, is we need to see this thing underneath 1%. And once it happens, and once it goes underneath 1%, we can kind of say, okay, well, it's actually now everyone's going to say there's no recession. That's when we need to be terrified. So usually a recession will never happen until this thing goes under 1%. That's why, we can't really say a recession is going to occur. And there is a possibility at this stage, well, not yet anyway, where there is a possibility that we could still see a rally into the end of the year, and maybe 2024 will bring more instability in markets. Although historically it doesn't tend to do that in a election year. Let's have a look at high yield bonds. As we mentioned before, there was something going on down here. It made that low, triggered alerts everywhere for me. I was getting a lot of alerts set through on Friday, but at the same time, take a look at this long leg doji, low, high, open, close, same level. We get above that high, maybe disaster is averted for now in markets. So certainly one to be watching. We also have a look here at home builders. Now, home builders broke up, which gave us kind of like a little positive sign for the Friday movement. And what actually happened was the market went from the point we pushed out the video, it went bullish, 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 and it opened super strong. I think we opened it 0.7 up for the NASDAQ and went up to like almost 1% over, and then sold off near the end of the day. Then we've seen those large transactions go through. So home builders in this case, what we're looking for is we're actually looking to see buyers come through for home builders. Effectively, we need to see these guys say the economy is looking better. If home builders keeps falling, it goes underneath a new low, not good for the market. An internal that we must be watching. So make sure to have alerts on home builders. We'll set one here together. Why the hell can't we? We'll do it right now. So we'll chuck that down there, and we'll also chuck a new high in just in case, because we really need to know both situations. Although you might not need to trade home builders, you do need to know what's going on. It's an excellent indicator of economic health, especially in the US. When we take a look at Treasuries, this is the level we all talked about. We did see that kind of like relief buying here. And the government shutdown aversion, 45 days or whatever, always the same thing, yeah, guys. In this case, I think it means that because I'm in the Big Apple at the moment, I can actually go see some of the monuments, which is cool. So over here, shout out to everyone in New York City. It's a great place, enjoying it very much. Treasuries over here, you can see that we're seeing some bounce going on, and it does look like someone has purchased. And of course, Treasuries took that low, so we should all be proud that we have talked about that. We've maintained the same kind of concept. We've maintained this idea that we're coming down here. And you'll notice that Treasuries went underneath all these wicks over here on the left-hand side. And I think that's a positive sign. On the weekly, a wick holds some importance. Somebody bought, otherwise you wouldn't see this kind of wick. So is this in capitulation? Well, no one ever, if you ask me ever, that we would see Treasuries, let's just put this in perspective, from up the top all the way to the low. That's a 51.57% loss in Treasuries from the high. Unheard of, ridiculous in some ways. So that's a very, very wide sell-off, and a lot of people are hurting on this. And I think a lot of people are probably getting leveraged on it. So could it go lower? Yes. Have we seen structural turnaround? Absolutely not. But I do think there are some positive catalysts that could come in for Treasuries soon. Dollar index, big strong wick. You can see here, we still maintain that we haven't really got a chance of moving to the downside until the 20 moving average has been taken out. You can see here the 1, the 2, the 3. Until proven otherwise, this thing's in a bull trend and there's not much we can do about it. And we've kind of been talking about that for a while. Once it closed above this level over here, it really pointed towards moving towards 107. So we're still kind of maintaining that. If it's going towards 127 or 107 or whatever it was, then basically we have gold moving to the low end. And gold tried to place a recovery on the Friday session. It got failed and sold off. And it doesn't like high yields. It doesn't like this idea that we're higher for longer. So I'm still a positive person on gold moving forward. But as I've said, it has like a 0% rate on it over the next month usually. And then it starts to get a little bit better. So gold could move all the way down to the bottom in this red box. I'm thinking 1800 lows is very possible here for gold. And after we saw what we saw with GDX, so we'll just load GDX here for a second. This was a excellent little trade opportunity. Obviously, we talked about the break even or profit targeting here. And then after it took that low, nothing you can do about it. GDX still great potential in the future, but just no sign of recovery on that yet. Oil, right at the level where I'd expect a buyer to come back in if they are going to do it. We did kind of call this pretty well, so we said that there was probably a new high in. For oil, people that want to go short, you really need the 20 moving average to be taken, which is the daily, the red one here. But more importantly, take that low out, so about 88.106. We'll set an alert for that together. If that happens, then we'll be pretty confident that oil might have just topped out, and that could be good for the market as well, because of course, really everyone should be watching oil. Oil and home builders, in my opinion, are the two big ones at the moment in this market. If oil makes a new high, I wouldn't trust the rallies on the stock market at that point. AAPL, the biggest stock in the world, still struggling, recovers, comes back up to that little resistance that we talked about, sold off from there. There's no recovery in Apple just yet in terms of we haven't seen it really find the buyers. But you can see here again the wick on the weekly looks a bit better. Here's the daily. Here's the long leg doji. Did it close above? No. It's sold off a bit. So it's still in indecision territory. A bit of a hard chart to read, I feel, at this stage. The other things that are interesting, though, is the market internals. So something like regional banks. Regional banks, you would think, wow, this might be an indicator of the recovery or weakness. Well, regional banks had that massive recovery off March. They've sold off back down to these levels. And they've actually shown some signs of a little bit of bullish pressure coming into them through the Thursday, Friday session. So you can see here, there's a little bit of recovery going on in regional banks. And this is, again, a little bit of a positive sign for bulls for the temporary kind of relief rallies. Tesla's the same, went through that 250 level or 249.81. And that kind of points towards pullbacks being met by buy demand. Some people will argue, well, look, Tom, that's a gap up, then gap down, that'll be an island reversal. You can see all the problems it's got. It's got a 50 moving average, it's got 200 moving average ribbon on the 2 hour. There's a lot going on this chart, but that's probably the way I would think of it at this stage. Just to get these markets back up to mean reversion and to kind of see some relief rally. For the German market, didn't quite get to the perfect sell. This would have been a perfect sell, around 15,578. Wow, that would have been a level, and it could still happen. Basically, we've got here the Wyckoff distribution that's pointing towards further selling, which is 14,800. And you can see that it tried to come up, sold back off. That's not a positive sign for markets, I guess. You could say this is a bit confusing because you've got this short off here. And if that makes a new low, so 15,286, you could be saying, okay, well, we're going to get below these tweezers then and keep pushing down. But let's go to the Aussie market. There's not too much to go through here. We'll go into the US in just a second. Again, very tough to read. I'd say the US, but it's just, there's almost no point in looking at this one because you can see here the market's like stuck and it's waiting for the US to show something for it. So let's go to the US now. The argument here is two ways. For day traders, you're going to actually be pretty positive on the Russell at this level. You're going to say, well, I think buyers are here. I think buyers are going to defend somewhere around here. And that 1780 level should be really leading into bulls. For sellers, they're going to say something around 1800 is still going to show a sell. So I think there's going to be a mixture of people that are buying here, and then there's a mixture of people that are trying to sell off here. And if we get above that high, then of course that's a very positive thing for buyers. And if we fail to hold this level down here, then that's very positive towards sellers. And it's probably going to create that capitulation event. So a lot going on here in the markets this week. NASDAQ, you can see the weekly futures market, US 100, long leg doji, big wick on the bottom. Go down to the daily, very similar thing. Big rejection coming through near the end of the day. We probably assume that's a buyer though, that came in right at the close. You can see here that little tick up. And again, it held itself. It held that previous bull, demand creation, bull, demand spiking up. So some interesting stuff here. It does look like it wants to lead into mean reversion, which is going back to the daily 20. So if we go back over here, daily 20 is going to push us to around 15,000 on the NASDAQ. And I think that's still probably the target at this stage for the short term. And just, it just is what it is. That's what markets do. They always have like an ebb and a flow. If you take a look at the S&P 500, I've got some arrows here, which I've talked about a lot. This is the trend line everyone's watching. You can see how it's bounced off that zone. And what it's really looking for, again, in my opinion, is to get back to that 20 moving average, to find some recovery, and then we find out whether the bears are really in control. And we'll be watching bullish percent index quite closely at that point. US 500 did the same thing as the NASDAQ. It found some rally, and you can see it found some rally. There's still supply over here, so that's a problem. Buyers are going to be showing themselves around here. Sellers are going to be showing themselves around 43.20. And it's very similar to the Russell 2000 and NASDAQ. There's both a bullish and bearish case on the daily, though stats would say that probably we're going for a bullish session on Monday. We'll have to find out how it opens, but look, that's what the stats would say anyway. We move over and we get a new high. Well, of course, then we go back to what we would think of as the 20 moving average on the daily. So at this stage, it would be moving back up to that 438, 440 zone, somewhere around there. And we really find out who's in the lead at that stage. Is it the bulls or the bears? Historically, if we do end up pushing through that zone, then we're probably looking at a potential for a new all-time high. So bears really need to, not new all-time high, but at least new high of 4,600, which I guess will lead into it. So bears really need to push it here. If they're going to push capitulation stories, they need to sell right now, get this thing down, 4150, 4200. That will be the next zone. And 4100 to 4150 is an incredible zone. I expect there to be algorithms. I expect big players to really come into the market around that zone for sure. Let's move over to Bitcoin, at least from a technical level. Take your own risks as always. Bitcoin is boring coin at the moment, and it's still continued to be boring coin. We know that this was where buyers came and stepped back in. We can assume that at this stage you've got to be temporarily bullish because of the way the market is kind of set up, which is this turn kind of action. There are sellers somewhere around 27.8, but it's still boring coin. I think the edge is kind of low here, and I'm looking towards that February, March, April next year. That's going to be really interesting. And still, we knew September was going to be the weak kind of point for usually Bitcoin, and didn't really go super weak. It didn't sell off with the most of the market, so that's interesting. But we'll be watching this one very closely to find some edge. Let's move over to Monday, October the 2nd, 10 a.m. ISM Manufacturing PMI, something we all have to watch together. Then we've got a bunch of statements coming out from other central banks around the world. We have ISM Services PMI and the non and farm employment change coming out on Wednesday, which is all New York time here. And then the big one, the one that's going to probably move the markets the most, jobs numbers, non-farm employment change, 8:30 Friday. You have to be on top of this one. If you're scalping into it, expect some wild moves. And this will all be about what is the Fed going to do next. And all eyes will be on, is it higher for longer? Is there a rate hike? And then you're going to have to look at the forward yields. I'll share off some information in terms of stuff on what the forward yields look like before and after, so you guys get a bit of an idea of how important that is, and that will be over at FX Evolution on Twitter or X, and you guys could follow along there. So thanks as always for being a big supporter of the channel. I appreciate each and every one of you. It's great to be here on Wall Street. Pretty much this is a recording on Wall Street, so awesome to be here, and thank you so much again to everybody out there. So yep, it's my time to go and see that bull, and I'll see you guys in the next video. Thanks very much. Bye for now.